Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. And tariffs are the focus this morning, with U.S. President Donald Trump agreeing to pause sweeping tariffs on Mexico and Canada for 1 month while they thrash out agreements on trade and security. So the last-minute move comes just hours before a midnight deadline in the U.S., and that would have seen hefty tariffs come into effect to the tune of 25% on Canada and Mexico and 10% on China. So still a big question about what will play out in terms of China, because Donald Trump is set to have a phone call with his counterpart Xi Jinping. Well, in the meantime, let's check in with Ritesh Ganeriwal. He is the Head of Investment and Advisory at Syfe. Good morning, Ritesh. How are you doing today?
Hey, Ryan. Pleasure to be here. I'm doing good.
Hey, quite interesting start to the year so far. A lot of back and forth, a lot of choppy action in the markets. Let's start with the tariffs. And we have the pause button being hit by Donald Trump. What are you seeing in terms of market action that's staying out for you right now?
Yeah, so as you know, over the weekend, Trump had imposed or put in position 25% tariffs on Mexico and Canada and 10% on China. But, just today, early in the morning, we see that he has reversed those decisions, at least for 30 days, while they negotiate with both Mexico and Canada. So on that front, 25% is delayed by 30 days. And that basically has had some implications on the markets. We've seen originally there were steep losses in the markets as they opened up. But the news of this reprieve has prompted shares to stage a partial recovery, with the Dow Jones Industrial Average ending the day just around down 0.3%. It was down like 600 points at one point of time.
Yeah, like you pointed out, there is a reprieve. I guess the big question is what's going to happen next? Is this just going to be a temporary reprieve?
My view is that Trump's policies will put pressure on countries, which are trading partners, and especially the ones which have surpluses with the U.S. So China, Mexico, Canada, even emerging markets like Vietnam could have some implications. But my broader sense is that we believe Trump will use tariffs as a tool to negotiate more favorable terms for the U.S. in general. So you might see a lot of volatility and back and forth in the near term. But eventually, I think Trump is a deal maker. And what that means is essentially he will use this as an opportunity to negotiate better outcomes for the U.S.
Yeah, to your point, we saw Mexico committing to 10,000 troops to the U.S.-Mexico border, and then Trump said, okay, I'll hit the pause button. So we might see something similar, of course, with China. What are expectations when it comes to the ongoing U.S.-China tensions, where you've got AI in focus, you've got so many different fronts when it comes to their ongoing relationship?
Yeah, look, in terms of China as well, right now there is a 10% tariff, but it could be, to the extent of 60%, as we have heard earlier. Now, the important thing again is I believe U.S. will have a more co-opetition stance with China rather than direct competition, because overall the two economies are more tied up than what, shows up. And there is definitely a lot of innovations that are coming out of China. You saw DeepSeek AI making the news last week and having a lot of ripple effects across the U.S. markets and all as well. There is questions about the use of these, very high-end GPUs, and focus shifts a bit from compute power to more inference-led models and all. So my overall view is that, yes, there will be, ongoing tussles with China. But again, to my point earlier, I think Trump is a deal maker, which means that he will try to get a positive outcome for the U.S. overall, while not completely disrupting, economic aspect of the U.S. as well.
Yeah, Ritesh, we saw DeepSeek rattling markets and really raising questions around valuations in the U.S. tech names. How do you feel about U.S. tech valuations right now?
Tech valuations definitely look a bit stretched at the current juncture, wherein if you look at the valuations compared to historical averages and all, it's definitely high. But at the same time, I guess what will determine forward market moves will be dependent a lot more on earnings, the growth that we see, rather than, just the promise, right? So there is still a lot of capex to be spent and all. I don't think that is completely derailed with what we have seen with DeepSeek, but I guess there is a point check right now where a lot of these will be called into question. But that does not mean the capex cycle will take a halt. We, saw Stargate announcement of $500 billion of capital commitments over the course of the next few years. We've seen the overall CapEx spending, the growth within the top 4 cloud providers is, Microsoft, Google, etc. That was 50% last year and will continue to be 40% this year as well. So there is still a lot of investments into the space, and the earnings are still pretty robust. You saw Microsoft and Meta's earnings to be pretty strong, while at the same time Tesla was a bit disappointing. There is a bit of divergence within the Mag 7 earnings and all, which basically means that as investors we need to be careful in terms of having a very concentrated exposure to just these names, and this calls for a greater diversification in terms of our investment strategies as well.
That's a great point, Ritesh. Talking about diversification, where are you looking at when it comes to splitting it up?
I think the first and foremost is most of the folks have the broader exposure to S&P 500, and we know that the Mag 7 stocks contribute more than 30% of that index. So my view is that over time, what is going to happen is the earnings growth for the Mag 7 is going to slow down from more than 30% in 2024, and it will go to in the 20% range in 2025. While on the other side, when you look at the earnings growth of the rest of the 493 companies, that's going to rebound from low 4% to more than 13%. So there is going to be that shift as we move forward, which basically means that we should diversify beyond this Mag 7 stocks. At the same time, given the policies that Trump will enable and implement, there are going to be some beneficiaries versus, there are going to be some sectors which will face headwinds as well. So domestic sectors like industrials, financials, and small cap stocks that I was talking about stand to benefit potentially with this, change in policy, as well as, all the earnings growth shift that we are witnessing and all as well. While if you look at the, healthcare sectors, ESG, those kind of sectors may face a little bit more challenging time as we move ahead in the near term.
All right. Outside of the US, are you looking at any global markets that seem attractive to you right now?
See, I think there is an aspect of US exceptionalism that has been panning out over the last decade or so. But having said that, on a more tactical basis, we have a view that there is a potential rebound that you can see in the Chinese market as well. Obviously, there is a lot that will depend on how the ongoing negotiations between Trump and China take hold. But so far, I think it's been not too bad in terms of, how things have panned out, because there was talks of, tariffs as much as 60%. At this juncture, it is 10%. And we do have this, conversation between Trump and Xi Jinping that will define how things will move forward and all. But from a valuation standpoint, we know that, the Chinese market is trading at a significant discount to the global market and all as well. And the kind of innovation that we continue to see coming out of China, I do believe that there is going to be a turning point at some juncture for the Chinese equities.
All right. Great overview of where things are going with Ritesh Ganeriwal. He is the head of investment and advisory for Syfe. Ritesh, thanks for your time and insights. Hope to catch up with you again soon.
Thanks, Ryan. Pleasure to be here.
All right. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.